Most immigrant families don't get rich fast, they get rich quietly. And that's why rural Airbnb investing works so well for people like us. And when I say Indian or Asian immigrants, I'm not talking about race, I'm talking about a type of person. Someone raised with like long-term thinking, respect for real assets like things you can touch, comfort with delayed gratification, and no need for flashy nonsense besides maybe the occasional, my son's better than yours. If that's you, this strategy fits you almost uncomfortably well. Immigrant households optimize for security first and then upside second, and that's why we like assets we can touch so much. We don't need validation today, and we're fine with being uncomfortable early if it compounds later. Rural Airbnbs aren't sexy, they're not downtown, they don't impress dinner guests, but they cash flow really, really well. Let me make this real for you. I bought a $170,000 cabin in a rural market, not LA, not New York, not anything cool. There was a low mortgage, it was capped downside, demand was driven by nature and tourism, not jobs. And that one property outperformed what multiple long-term rentals would have done in a city. The strategy works best on homes under $300,000. Why? Because lower mortgage, 2, less pressure, 3, higher margin for error. They're not hard to find. You don't need like a bunch of discipline, and these homes can be found anywhere, and they've made $70,000 to $80,000 a year on average. But here's where a lot of small immigrants will stall. We hesitate to invest in design and setup, and that hesitation, that waiting for a year, waiting for 2 years to feel comfortable, it's expensive. The difference between a basic furnished home and a well-designed short-term rental is often 3 to 5 times the income. So $50,000 to $60,000 in a full or quality setup, good design can eliminate the need to buy another property. So one great Airbnb can outperform 5 long-term rentals, and that's what's happened for me. And that's what real leverage is. Most investments require like 20% down, and that's normal. That's what everyone will tell you. But that mistake is draining all your cash at closing. So you stack capital intentionally. You need to do this. Preserving cash so it can be invested into income-producing design. Using structured leverage strictly for furniture and setup, negotiating maximum seller credit so you're not paying an extra $8,000 to $10,000 out of pocket is really important. That money doesn't disappear. It gets converted directly into higher nightly rates and better bookings. And here's the quiet upside of what most W-2 earners overlook. Short-term rentals have unique tax treatments compared to long-term rentals. That means you get strong cash flow, you get way better tax efficiency compared to what my long-term rentals do, and you get appreciation on the property over time. So you're not choosing between cash flow or appreciation, you get both, and that's freaking rare. This strategy rewards patience, it rewards structure, discipline, long-term thinking, the same values that most immigrant families were built on. This isn't gambling, it's alignment. If you grew up watching your parents build slowly, carefully, and deliberately, rural Airbnb investing isn't risky, it's very familiar to you.